Dogecoin is testing a key resistance level. If that sounds interesting to you, make sure to continue watching this video. We just hit over 2,300 Telegram members. This is an absolutely free chat for those of you that want to stay up to date with my trades and my signals. Make sure to check out the link in the bio. Hey guys, Pingu Charts here. Welcome back to another Dogecoin analysis video. As always, if you do enjoy my content, make sure to hit that like and subscribe button. If you guys are interested in 35,000 trading bonus, make sure to check out the link in the bio. Now, ladies and gentlemen, as you guys can see on Doge, we saw a very nice squeeze opportunity going into the highs of 0.286. For those of you that were part of Telegram, you obviously got the alert early on, and we were looking for that breakout opportunity for that squeeze, which of course happened perfectly. Now we have to be very careful here because you can see that Doge continues to use the exponential moving averages as support, but the problem is that there is a major resistance level right here. We are still focusing heavily on the 0.29 region, but most likely what's going to happen is we are simply just going to see these little breakout opportunities until we end up hitting that zone structure. Of course, using the exponential moving averages as support means the fact that we are looking for a continuation, but there's a few things I want to talk about on the daily time frame. But in order for us to know whether or not we are in a bullish momentum trade, we first have to wait for 0.29. If 0.29 ends up rejecting, that of course is going to be a bearish confirmation, and this simply would just mean it's a smaller relief rally before a stronger continuation back down. Again, it's going to be important for the bulls to actually end up breaking above 0.29 using this level as support, and then we have a massive squeeze opportunity along our hands. Until then, we are simply just looking for these wick break opportunities. Every time these wick breaks happen, we enter these long position and play into 0.29. Now, of course, for those of you that were in Telegram today, I showed you guys perfectly how the exponential moving averages played out. We were in a long position, and a lot of folks were wondering when to take profits, and I mentioned to take your profits at the 20 exponential moving average. This is the first time after a very long time that Doge has successfully tested that 20 exponential moving average. Although we rejected that level, you can see that we are now trading in between the EMAs. This usually is a no trade zone given the fact that we also have weekend volume. What we are simply waiting for is to see whether or not the bulls can have any sort of momentum here, breaking above and using these levels as support. That of course becomes the first swing target opportunity. Is once we see that break, that is a confirmation for a lot of people to start looking for trading opportunities on Doge. I also want to point out the fact that if you pay attention to the daily, that we do have a stronger V-shaped formation looking to play out. That's why there's so much emphasis around the 0.29 region. That is going to be the first level structure ends up breaking for us to see that V-shaped continuation as well, and a larger squeeze opportunity on Doge. Now, looking at previous price analysis, you can see the last time the Doge actually did manage to break above the exponential moving averages after being extremely oversold. Once we started using that level as support, you can see that we saw that same sort of V-shaped completion, and then that's where Doge erupted for a stronger continuation. That's exactly what I'm paying attention to as of right now. Again, of course, the market was extremely oversold, but you have to be very careful when you are trading these sort of move sets. A lot of traders, what they'll do is they'll end up seeing this opportunity into 0.29, think that the bottom is in, they'll end up taking that position, and then of course the market does this. And that's exactly what we want to be very careful about. Is instead what we want to see from a bullish momentum trade is something like this for that continuation, to know whether or not that 0.21 region was of course that local bottom. So as of right now, all eyes remain on 0.29. As long as we hold above our exponential moving averages and we are not losing them, we are looking for that continuation trade. I will keep you guys posted in Telegram, of course, if there are trading opportunities from those wick highs. But for those of you folks that are on YouTube, just pay attention to these wick highs as you see that continuation. Every time market ends up breaking above that level, you enter a long trade, but the main target remains to be at 0.29. And once of course that level is tested, then we know exactly where to go depending on how the daily closes. But that's pretty much all I have for you guys today. As always, if you do enjoy my content, make sure to hit the like and subscribe button. If you guys are interested in 35,000 trading bonus, make sure to check out the link in the bio, and I hope you guys have one.